Okay, so get this. Warren Buffett, the Oracle of Omaha, the guy everyone thinks of as Mr. Steady, reliable companies, just did something that kind of has everyone going, huh. He bought into VeriSign. Yeah, you heard me right. A tech company. And we're not talking Apple or Microsoft or anything like that. This is VeriSign. They handle domain names. You know that .com at the end of a website address. That's their world. So what we're going to do today is try to figure out why would Buffett, someone who made his billions on Coca-Cola and, good old-fashioned businesses, suddenly be interested in the internet's address book?
Yeah, it's a head scratcher for sure.
Oh, yeah.
Especially given how much he always talks about investing in things anyone can understand. And I mean, at first glance, VeriSign seems pretty straightforward, right? You type in google.com, they make sure you actually end up at Google.
Exactly. But come on, there's got to be more to it than that. We all know Buffett doesn't just throw money around for fun, so let's break this down. We know Berkshire Hathaway, which is his company, right, bought almost 378,000 shares of VeriSign. Took him 6 days to do it. Total spent about $74 million. Now, I know that doesn't sound like much when you're talking about a company as gigantic as Berkshire, but it still gives them a 13.7% ownership stake in VeriSign.
Yeah, no, that's a real chunk of the company. It definitely tells us they're not just dipping their toes in the water here. What's interesting to me, though, is that for Berkshire, this isn't some huge gamble financially. So it could be they're seeing this as a way to test the waters, maybe with tech. I calculated a little bit.
All right, so let's talk VeriSign itself. First thing that jumps out at me is their profit margins. These things are insane. We're talking 88% gross margin, which basically means for every dollar they bring in, they keep 88 cents before even thinking about other expenses. That puts them way up there when it comes to profitable companies like top tier.
Yeah, those are some eye-popping margins, no doubt, especially in the tech world. A lot of those tech companies are running on much thinner margins because they're constantly fighting for customers, spending a ton on R&D, that sort of thing. But VeriSign, they've got what you might call a captive market.
Right, because they've pretty much got a monopoly on .com and .net names. And let's face it, those are essential these days if you're any business that's online. Not exactly the sexiest business, but everyone needs them. It's almost like they own the land and everyone else has to build their businesses on it.
Oh, that's a great way to put it. Owning the virtual real estate.
Hmm.
And that's a big part of why their business model is so profitable. They don't have to shell out huge amounts to get new customers or come up with some fancy new product every other week. They basically just collect the rent.
And you know what? This boring but essential thing might be exactly what Buffett likes about them. He's always been a fan of those companies that are easy to understand, have a clear advantage for years to come.
Yeah, it definitely fits his pattern. And it's worth pointing out, VeriSign isn't just some little American company. They're making money globally.
Yeah.
Like over 2/3 of their revenue comes from the U.S., sure, but they're big in Europe, Middle East, Africa, even China.
So global reach, simple business model, profits galore. Okay, I'm starting to see why Buffett's interested, but let's really get into their financials here. See if they truly are what you might call a Buffett company when it comes to actual performance. And from what I've seen, they've consistently been bringing in solid returns. I mean, their gross margins have been above 87% like clockwork, operating margins over 68% consistently, and net margins, which tells you how much profit they actually keep from every dollar of revenue, that's been over 55%.
Those are some really strong numbers. They show VeriSign is well managed. They're efficient at turning revenue into actual profit. The kind of consistency Buffett drools over. It says, hey, this isn't just a one-hit wonder. This is a company built to last.
And their recent performance, well, it paints an even better picture. Just in Q3 of 2023 alone, their revenue was up almost 4% year over year, hit $391 million. And profits followed suit. Gross profit up almost 5% to $344 million. Operating profit up almost 6%, landed at $269 million, and the net profit jumped almost 7% to $201 million.
Yeah, those are some healthy increases for sure. But here's the thing. While those numbers are good, they also tell us VeriSign isn't exactly a rocket ship taking off. I mean, their revenue is growing, but not at some crazy pace. And for all of 2023, they brought in about $1.5 billion in revenue, which was up 4.79% compared to the year before. Their net profit, though, was pretty impressive, $818 million, a whole 21% jump.
So they're making a lot of money, but it's not the kind of explosive growth a lot of those tech investors are chasing after.
Exactly. And that's something to keep in mind as we try to figure out what Buffett's thinking here. Could he be shifting gears a bit, moving away from growth and more towards stability? Is he looking for companies that are more like utilities? You're providing those essential services, but with predictable returns?
That's a really good question, and one we're going to explore in more detail.
Yep.
But first, we need to take a quick break. You know, it's funny when you think about it. VeriSign's this huge part of how the internet works, but for Buffett, this was like a tiny purchase, like a drop in the bucket compared to what Berkshire Hathaway actually owns. I mean, they've got mountains of cash just sitting there. $320 billion reported at the end of last quarter.
Yeah, that's right. This VeriSign thing, it's barely a blip on their radar. Like finding a $5 bill in your pocket, nice, but it doesn't change your life.
Yeah.
And most folks are saying Berkshire's cash pile is only going to get bigger. So
Yeah.
what's that telling us about what Buffett's thinking?
Well, some people are saying maybe he's getting a little spooked about the market. Like maybe he sees some storm clouds on the horizon and wants to have plenty of cash ready to go when things get rough, you know? Buy up some bargains when everyone else is panicking.
Mm.
It wouldn't be the first time he's done that.
Yeah, you're right. He's always been about being patient, waiting for the right moment. He's famous for that line, be fearful when others are greedy and greedy when others are fearful. And there's been some talk that Berkshire might actually be quietly selling off some of their Apple and Bank of America stock, which are two of their biggest holdings, by the way.
Interesting. So maybe he is battening down the hatches, getting ready for a storm.
Mm-hmm.
And VeriSign, with its steady, predictable cash flow, well, that makes sense. It's not going to suddenly double in value overnight, but it's probably not going to crash and burn either.
Yeah, I think that's a very reasonable way to look at it. When things are uncertain, a company that everyone needs and that just keeps making money well,
Yeah.
that becomes super attractive. Like
Yeah.
having a guaranteed paycheck no matter what's going on in the world.
Exactly. And when you look at their cash flow, it's clear why Buffett might see VeriSign as a source of stability. Last year in Q3, they generated $253 million in operating cash flow, which was up 3.3% from the year before. And for the whole year, they pulled in $854 million in operating cash flow, a 2.73% increase. Consistent and predictable, just the way Buffett likes it.
Absolutely. And it's not just the cash flow, it's their overall financial health. They've got a good chunk of cash and short-term investments, $267 million and $378 million respectively. Gives them a nice little cushion if anything unexpected happens.
Plus, they're really good at collecting money from their customers. You can see it in their accounts receivable. It's steady. It basically means they're not having to chase down late payments, which is always a good sign.
All signs point to a company that's not just profitable, but also financially responsible. They're not drowning in debt or taking crazy risks. They're managing their money well, which is another thing that lines up perfectly with Buffett's way of thinking.
So here we've got this tech company that at first glance seems a little out of place in Buffett's portfolio. But when you dig deeper, you see it actually ticks all his boxes. Strong financials, a business anyone can understand, and a huge competitive advantage. But there's another piece of this puzzle we haven't talked about yet.
You mean the whole question of did Buffett even make this decision himself?
Exactly. Some people are saying maybe it was one of his portfolio managers who pulled the trigger. I mean, Berkshire Hathaway is massive, investments everywhere. It's hard to imagine Buffett personally looking at every single deal.
It's a fair point.
Yeah.
But I think we got to remember that Buffett has created a very specific way of investing at Berkshire Hathaway. His team, they're trained to look for the same kinds of companies he would pick himself. And VeriSign, with its high profit margins, consistent earnings, and the fact that they basically dominate their market well, it fits that mold.
So even if he didn't personally give the thumbs up, it still makes sense in the grand scheme of his overall strategy. It's like he's created a system, a way to filter for good investments, and VeriSign passed the test.
Exactly. And there's a lesson in there for any investor, really. Doesn't matter how much experience you have or how much money you're playing with. You don't have to be Warren Buffett
Sure.
to use his principles.
Right. Look for companies with a good track record of making money, a business model you can wrap your head around, and a competitive advantage that's going to last. Anyone can do that. But we're not done with this mystery just yet. We've figured out this VeriSign buy fits into Buffett's overall approach, but the timing, it's still a bit strange. It's such a small buy for Berkshire. Could there be something more to this?
Well, some analysts are thinking this might be a sign that Buffett's getting more and more interested in the tech sector as a whole.
So is this like the beginning of something bigger? I mean, Buffett, he's been famous for staying away from tech for years, but this VeriSign thing, even though it's small, maybe it's a sign he's changing his mind.
It's definitely possible. Maybe he's realizing that tech's not the Wild West it used to be. There are companies in there now that are stable, that offer the kind of value he looks for. And let's face it, the internet's not going anywhere. And companies like VeriSign, they're basically running the show behind the scenes.
Right. It's like that saying, if you can't beat 'em, join 'em. Maybe Buffett's realizing that tech's not this crazy, unpredictable thing anymore. It's a real part of the economy. It's here to stay.
And it's not just about the companies themselves. You got to think about what's happening in the market as a whole. We've seen a lot of ups and downs lately, interest rates going up, people worried about inflation, all that global uncertainty. And when things are shaky like that, investors, they start looking for safe places to put their money. And companies with solid numbers, companies that just keep making money like VeriSign, well, they tend to do pretty well in those situations.
So Buffett's maybe getting ready for a bumpy ride.
Exactly. He could be putting together a collection of companies that aren't going to freak out every time the market sneezes. Companies that are going to give him steady returns over the long haul.
That makes a lot of sense. It also reminds me of something we talked about earlier, VeriSign's price-to-earnings ratio. It's pretty high, which would normally scare some investors off. But for Buffett, maybe that's actually a good thing.
You're right. That's a really good point. Remember, Buffett's a value investor at his core. He's looking for companies that the market is undervaluing. And with VeriSign, that high PE ratio, it might just mean that investors are willing to pay a premium because they know it's a safe bet.
So he's kind of betting that other investors will eventually catch on.
Exactly. Playing the long game, just like he always does.
Yeah.
And we can't know for sure what he's thinking, but this VeriSign move, it's definitely not just a random gamble. It's a calculated decision that tells us something about how he sees the market changing and how he's finding value in unexpected places.
Well, this has been quite the deep dive. We've learned some really interesting stuff about VeriSign, about how Warren Buffett invests, and maybe even about where the market's heading in general. So for you, our listener, what are the big takeaways here?
Well, I think the biggest thing is that sometimes the best companies to invest in are the ones nobody's really talking about. They're not the flashy, high-growth names that are always in the headlines. They're the ones that just quietly make money year after year.
VeriSign's a perfect example.
Exactly. They're not going to make you a millionaire overnight, but
Yeah.
they're the kind of company you can just tuck away in your portfolio and not worry about. They'll be there chugging along, making money no matter what's happening out there.
It also shows us that even the best investors in the world, they're always learning and adapting. Warren Buffett's famous for sticking to his value investing principles, but he's not afraid to change things up when he sees a good opportunity. Absolutely. He's not stuck in the past. He's always looking for new angles, and that's something we can all learn from. Don't be afraid to question what you think you know, to look for value where other people aren't looking, and to change your strategy when the market changes.
And hey, maybe you'll find your own VeriSign out there, a company everyone else is ignoring, but that has all the makings of a real winner.
Well said. This has been a fascinating look at domain names, value investing, and one of the greatest investors of all time. Thanks for joining us on this deep dive.